Gold was up about 3% on the week. We closed just below 3,900. I think we closed at
Gold has just wrapped up another stunning week, surging close to the $4,000 mark, while silver is setting up for what analysts are calling a once-in-a-generation breakout. According to Peter Schiff, gold closed at $3,888 this week, up about 3% overall, one of the strongest weekly performances in recent memory. At the same time, reports from FX Empire confirm that the odds of a Federal Reserve rate cut have soared to 97%, and Reuters notes that gold is on track for a 7th straight weekly rise. So what does this all mean? In today's deep dive, we'll merge Peter Schiff's market wrap with the latest analysis from FX Empire and Reuters to unpack the forces pushing gold higher, why silver is being called the next big breakout story, and what risks still remain in this fast-moving market.
Gold was up about 3% on the week. We closed just below 3,900. I think we closed at 3,888. It was up about $30 on Friday, but 3% on the week. And a lot of that gain happened on Monday.
Peter Schiff's summary captures the headline: gold at $3,888 per ounce, notching a 3% weekly rise. That move includes a $30 gain on Friday alone, highlighting the momentum behind this rally. Schiff notes that much of the week's strength actually came early, on Monday, setting the tone for the days that followed. But what makes this significant isn't just the price level, it's the context. Gold has now logged 7 consecutive weekly gains according to Reuters, driven by safe haven demand, expectations of Federal Reserve rate cuts, and the growing possibility of political instability in Washington. Gold nears $4,000, silver eyes a breakout. FX Empire reports that gold is now rapidly approaching the $4,000 milestone. This number isn't just another round figure, it carries psychological weight for investors and traders. When markets approach major milestones like this, they often act as magnets. The closer gold gets to $4,000, the more it captures attention, which can pull even more money into the market. Why is gold climbing this high? FX Empire points to 3 major factors. 1. Momentum buying. Once gold broke past key technical resistance levels earlier this year, it triggered buying by both institutional and retail investors. Technical traders often set buy orders above resistance lines, which fuels rallies once those levels are crossed. 2. Central bank support. For months, central banks have been steadily buying gold. This trend is not just about reserves, it's about diversification and protection against currency volatility. Their consistent buying provides a strong floor under the market. 3. Concerns over U.S. growth. Even with stock markets near highs, investors are worried about the foundation of the U.S. economy. Slowing growth, mounting debt, and fiscal uncertainty are all feeding demand for hard assets. At the same time, silver is attracting attention. Analysts describe silver as setting up for a generational breakout. Why generational? Because the levels being watched are near $48 per ounce, heights last seen in 2011. The important detail is that silver often lags gold during the first stages of a rally, but when it finally catches momentum, it tends to move aggressively. Historically, silver's rallies can even outpace gold in percentage terms. That's why traders are watching this setup so closely. The stage is being set for silver to make one of its biggest moves in more than a decade. Rate cut odds at 97%. Another FX Empire article digs into what could be the single most important driver of this rally: interest rates. According to market data, the probability of a Federal Reserve rate cut now stands at 97%. This kind of near certainty is unusual and tells us how much pressure the Fed is under. Why do rate cuts matter for gold and silver? Let's break it down. Lower real yields. When the Fed cuts rates, yields on U.S. Treasuries fall. Gold doesn't pay interest, so when yields are low, the opportunity cost of holding gold decreases, making it more attractive. Weaker dollar. Cuts usually weaken the U.S. dollar. Since gold and silver are priced in dollars, a weaker dollar often drives their prices higher. Policy signal. Cuts show the Fed is prioritizing growth and financial stability over inflation fears. That sends a message that conditions may be weaker than they appear, and investors hedge by moving into safe haven assets like gold and silver.
Now set for a 7th straight week of gains. This kind of streak highlights just how strong momentum has been. But Reuters also points out that this rally isn't just about the Fed. Political risks are adding fuel to the fire. Government shutdown fears. The possibility of a U.S. government shutdown is pushing investors towards safe haven assets. Shutdowns create uncertainty about fiscal policy, government spending, and overall stability. Gold thrives in times of uncertainty. Central bank buying. Reuters confirms what FX Empire noted. Central banks are continuing their steady purchases of gold. This consistent demand adds to the long-term support for the metal. Global safe haven demand. Beyond the U.S., geopolitical tensions and economic uncertainty in other regions are keeping demand high. This combination of Fed policy expectations and political instability creates a powerful backdrop. It's not just about rate cuts, it's about confidence. And right now, investors are showing more confidence in gold than in paper promises. When we merge Peter Schiff's market wrap with the latest reporting, a clear picture emerges. Gold is closing in on the $4,000 level after finishing the week at $3,888. Silver is approaching what analysts describe as a once-in-a-generation breakout with targets near $48. The Fed is at the center of this story, with 97% odds of a rate cut fueling investor positioning. Despite the bullish outlook, analysts warn that a pullback to $3,800 is possible in the short term. Reuters confirms gold's seventh weekly gain, underscoring the strength of safe haven demand amid U.S. political risks and global uncertainty. Why this matters. Gold is not just moving on daily headlines, it is reflecting deeper issues in the global economy. Investors are grappling with inflation, monetary policy, and political instability. Silver, meanwhile, is often overlooked, but its potential breakout could become the surprise story of the cycle. The Schiff clip provides a snapshot of the week, but when combined with FX Empire's data and Reuters' confirmation, the broader trend becomes clear. Both gold and silver are at pivotal moments.
The takeaway from this week is simple. Gold is approaching record levels near $4,000. Silver is on the verge of a breakout, and the Federal Reserve is the driver behind market sentiment, with rate cut expectations now at 97%. Schiff's observation of a 38.88 close is part of a much larger narrative, one where central banks, investors, and policymakers are all converging to shape the future of precious metals. Disclaimer. This video is for informational and educational purposes only. It includes commentary from Peter Schiff combined with reporting from FX Empire and Reuters. This is not financial advice, investment guidance, or a recommendation to buy or sell any asset. Always conduct your own research and consult a licensed financial professional before making any financial decisions.